Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, January the 7th. The year's 2020. Let's talk trading. How to fix your trading, part 2. Um, there was something I forgot yesterday when I was going over the screen. So let me bring that screen back up here, and I'll go through it again. I was going to show you something with the open, but then I had to look at the code because the open lines weren't showing the crisscross, so I might have to change the code a little bit. But right now, we're showing the high and the low, and we're only showing lines that haven't been crisscrossed. And in this case, we're going to look at the current period for the last 1,000 bars, starting with the current bar. So, when we do this, well, let me bring it out to the daily. First, it's kind of like, what do you see? Well, you see the candles. Then you see some lines that are off the tops and some lines that are off the bottoms. But you see here, if you put the cursor right here at the bottom, you can see over here that line had been crisscrossed. And then if you put it at the top right here, you can see once again that the top of this candle has been crisscrossed. So we only want to look at the ones that haven't been crisscrossed. Why? Because those are places where you can look for price to reverse, look for price to break out of, or what you can do is you can look for targets if you're already in the trade to exit, take some profit. So for example, you see all these blue lines here. If price dipped down here and you were short, you would probably want to take some profit here in this area. Okay, now in this case, this is daily. There's, maybe 10 or 20 pips between some of these lines, but you can even go down to H1 and basically get the same idea here. So right here, if you were short, it broke through here, you might look to target profit in this area. Or if you were waiting to enter a trade, you might look to wait for the price to get here and look for a reversal. So for example, if it hits right here, of course, at any time it could go either way, but it could continue to slide down to here, or it could hit this or get near this and reverse and go up. So this simple, little tool, only looking at the lines that haven't been crisscrossed, can be pretty powerful trading tool. And that's, once again, the TRO-HL5 indicator that is out there for free. No donations required. But, of course, boys and girls, you have to remember something. These videos for educational purposes only, and your results may differ from mine, and trading is very risky. You can lose all your money. So, if you're looking for financial advice, trading advice, investment advice, you need to seek your advice from an accredited financial professional. That way, when you lose your money, you know you got your advice from an accredited financial professional as opposed to somebody you heard off a YouTube video or read about on some trading forum on the internet. Okay, disclaimer out of the way. So, whether or not you use an accredited financial professional, make sure you always have a stop loss in place. It doesn't matter what you're trading. You could even have mutual funds. But if that price starts dropping, you should only allow it to drop so much before you exit that investment. Okay, moving on to the weekly. We've got 1, 2, 3, 4, 5 gaps that haven't filled yet. You can see that the dollar yen started out here, went below the weekly previous week's low, then exited the previous week's wick zone to the upside, and has made a pretty nice move there. And looking at the yearly, we're 19 pips below the yearly open. Now, one thing to notice, remember this right here indicates a turn trade. A red candle at a bottom, then followed by a green candle. Sometimes you want to look for that continuation. So right here we have the turn, and so far we're having a nice continuation to the upside. Once again, very simple tactics that we can employ to fix our trading. I mean, these things are just so basic. You know, people always talk about price action, but they never ever really describe it. But you see here, you see these tops. You have a green candle, a red candle closes. Okay, start to look for price to go down. So here, it made a higher high, went down, made even a higher high and came down. And you can see here, it came through those wick zones. Also, it came through that highest open. So a lot of times these methods overlap. So you could be playing the wick zone, or you could be playing the highest open here and lowest open. So right here, this is a turn trade, but had you traded that lowest open, you would have gotten in a lot lower at a lot better price. Right here, simple coming out of a wick zone. Here's a previous wick zone way over here. And once again, would have gotten you in at a better price. So you just look and see. Of course, you always have that stop loss in place because you don't know what's going to happen on this trade. And so just in case it goes against you, you can only lose so much barring unforeseen circumstances. Now we put in yesterday's opening range for the week right here. You see we broke through it and price is coming back down. We're only 2 pips above it. And here's the opening range for the month right here. And we're smack dab in the middle of it. Okay, looking at the weekly wick zone here. Let's see, do we want to, I think we want to put that back to the hourly. So no opportunities on the weekly wick zone today. Inside bar, remember we were inside that monthly inside bar. Now we broke above it, right through it. So once again, that inside bar trade proved to be profitable. And if you already exited at the peak, you'd made 15 pips. Once again, not a bad trade. And in this case, we're just using simple inside bars. So here's the last weekly inside bar was 3 weeks ago. Monthly was 4 months ago. And right here, we've got on the dashboard showing where the action is on inside bars. Okay, on the daily chart, you see, once again, we broke out of the previous day's high here. We've got 6 pairs showing a range over 100, and the Euro USD clocking in at 64 pips. And somebody had asked me to start showing the Euro. So here on the Euro, it broke out of the previous day's lower wick zone right there. It was good for about 23 pips if you nailed that bottom. You can see here it actually went into the previous day's upper wick zone and then came out and went through it. And not even looking, I know the pivot point must have been somewhere, so obviously it took out the pivot. And showing the weekly H1 highest open, the daily H1 lowest open, the monthly D1 lowest open, and the yearly H1 lowest open, so we can see where price is in relation to those. The buy zone on the dollar yen. We did not hit the pivot as of yet today. We can look at the euro. And you can see we took out the pivot point right there. We took out the missed pivot right there. So you got 2 for 1 on the euro. Also notice the euro crossed below that weekly open. Rat zone, not enough range. And we'll take a quick peek at the euro. As you can see, range is large enough, about 63 pips. And so there's been a few rat reversals here off of that bottom, or a turn trade. Once again, for those of you not familiar with the rat zone, if you enter, you can enter anywhere in here. Just make sure you enter in here, look for long, enter short here. And usually by the end of the day, price will leave the rat zone. On the dollar yen, if you remember, I called the weekly pivot earlier on the first day of the week. It said look for price to hit that 108.47, and as you can see, it took it out towards the end of the day. Actually, it was in, looks like, the New York session yesterday. So nice move to take out that weekly pivot. So those weekly pivot trades are once again just statistical trades, nothing fancy. So we took out that weekly pivot, and you can see how many times we've missed that weekly pivot since the year 2015. Now remember, boys and girls, sometimes it might take a while to take out a missed pivot. So don't think you're going to get it each and every day, because that's not the way it works. So for example, we missed a pivot today here. We missed one back here, 1231. So still though, I mean, there are no missed pivots since before April 30th, 2019. As far back 5,000 days worth of trading. I think that's how many days we look at. Let's see, missed pivots plot. Oh no, 250. That's a year. No, it can't be 250. That must be. And that's only 100 bars. Let me switch that over. Okay. So you can see there was a lot more missed pivots, but lots of them have been filled, and that's what's left out of the missed pivot spot. 250 daily bars. Now I'm curious to see what happens if I crank it up to 500. Okay, we had one back in 2018. Now I'm really curious. See what happens if we go to 1,000. Oh, we had a couple in 2016. So you can see there's just not that many missed pivots. They usually get taken out. So, boys and girls, you know price doesn't like staying between these two lines. I sound like I repeat myself. And somebody asked about the Einstein line. It's real simple. As soon as you bring up your platform, it's going to plot a horizontal line. It gives you a long trigger and a short trigger, and you basically just take those triggers. It's all relative to when you enter the trade. Of course, you need to use a few other things that you already know about trading, which we can possibly go over tomorrow. So, boys and girls, fellow traders, when you're out there trading, remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.